morning, all. Ira Epstein of Linn Associates with your morning flash update for this weekend of Friday, the 8th of August, 2019, about 9:25 a.m. Central Daylight Time. Now, before I get into all the data, I want you to remember you had the equivalent of two trading sessions yesterday, even though we don't realize it. The first was obviously the yin-yang as the Fed on Wednesday cut interest rates. When they did it in the press conference, Asians are asleep, European markets are closed, right? So they wake up, they get the yin, they get the yang, it comes back to America. We had rallied rather smartly, making up most of the losses in key markets like the stock market. At about 1:05, 1:07 in the afternoon, that's Central Time, President Trump tweeted that he is putting an additional 10% tariff on the $300 million worth of goods we import, not the $250 million already. This is everything else, and there's so far no exceptions, starting September 1st. Obviously, that's a big unknown. So you got to go through that process again. So I was watching last night an Asian conference on Bloomberg about 9 o'clock. I saw Mike Pompeo do his best to explain it. Then, obviously, you're going to get your Asian market reaction, which was down sharply. Then you go to Europe. Now you're back here. So our market, just like it did yesterday, is absorbing that. Now you've got to wait to see how does the market feel about it as the morning progresses. You're still getting your bids in the safe havens. The gold market is up. The bonds and notes continue to move to the upside. The Japanese yen continues to move up. So the traditional markets are moving up. You overdid it probably to a degree with the monster break in the energies yesterday. And at the end of the day, there's a certain inelasticity to demand for oil. Now, there's plenty of oil in China. It's been taking oil from Iran and so on. We know that it's piled up, according to the news reports, in the port. So we'll see what happens there. In the grain market, you took out and you dropped grain sharply yesterday off the idea, forget it, we're not going to get the grain purchases supposedly. We saw a bit of soybeans come through from a private sector, not the government yesterday, but that was stuff already probably in the cog. And now the question is, what does China do to retaliate? And there's going to be a tit for tat. Don't think that this is going to make it just go away. It won't. Now, when you look at today's data, it's muted because of, obviously, what the president did. But factory orders, well, they were up 0.6, but they expected up 0.10, and the prior month was revived to a percentage of -7. So we're not in trouble in the factories, but there's a slowdown. Factory orders ex defense up 1.2%, the prior month down 0.4. That's not a bad number. Factory orders ex transportation up 0.1, the prior month right there. June factory orders revised, durable goods negative 1.3%, prior up 2. That's not a good number. Those are your longer lasting items. University of Michigan consumer sentiment, it's useless. It was fine then, but you got a whole new set of figures with what the president did. It's not that they're useless, but this is now old data. New York ISM, this I do look at. It had been neutral. Any reading 50 is neutral, above 50 is expansion, under contraction, it's down to 43.5. Payroll numbers. This is a good number, a solid number. Originally, I had written at the beginning of the week, the first estimates were for 166,000. They came in 164. Nothing wrong with that. The unemployment rate sat at the 3.7%. Nothing wrong there. July private sector payrolls, 148,000, down a little bit from the expectation as I see it of 160, but still a solid number. Government payrolls up 16. Prior was 33. I wonder where the census is going to come in there. It'll show up sooner or later, those people doing that. Labor force participation rate, still 63%. So I don't have to go through each number. They look okay. Trade deficit, we know it's expanding, and this has got the president's ire up, and this is it. It keeps moving on him. Now, it came in at 55.15. They expected 54.6, so that's greater than it thought. They did do a small reduction on the prior month. China in the meantime, is threatening to retaliate. So what are they going to go after? You got to understand that they have limited hands. They could attack U.S. Treasuries, but then they're shooting themselves in the foot because they've got monster investment. They could, of course, hurt Boeing, FedEx, companies like that, and they could make anything we send there very difficult to get through their customs to get into the port. You saw that recently happen with Canada. So those would be the annoyance things. On the other hand, they got a lot of factories, and this could slow it down. There's another thing people aren't understanding. You're approaching that 7 yuan to the dollar. That's a number they've defended. The higher that number goes, the offset is that as you're still bringing in Chinese goods, their currency's cheaper to our importers. Another point. U.S. Commerce Department reported that imports from China fell 12% in the first 6 months of 2019 from a year earlier, and our exports to them fell 18%. So we're both doing less business with each other. As I said, the yuan has fallen, and the Eurozone, well, you've still got a market where they had one bright spot, retail sales. They're consumers there, but when you start looking at all the other numbers, they're not doing well. I think you've boxed in the European Central Bank that they have to take actions at their next meeting. So you look at it, you take a look at where you're at, you're going to wash this thing out apparently. You're taking the stock market down a little bit further. Copper, that's the market that you would think would get slammed on this, and it is getting slammed on it. The weather's improved, that high heat dome for natural gas gone away, and that's one of the reasons you're breaking there. I covered this, and let me see if I can get back to what I wanted to show you right here, and a lot more. This morning, I certainly covered, I had a 25-minute video for my subscribers where I threw out everything that I'm seeing, and that's the whole idea. I get up 6 in the morning, make a quick recording for videos. They're typically not that long. They're nowhere near that long, actually, but this is an unusual event, and the idea is, what do the charts look like? I want to give you some confidence in what you're thinking and maybe show a different point of view or giving you confidence that your point of view is the right one. I'll try to cover 40 futures charts and a number of ETFs, typically 5. What do I do in this? I'm going to give you a technical analysis, and I'm certainly going to tell you what I see in the fundamentals. But then I'm able, because this is a subscriber video, what you're looking at here is free to the general public. In the subscriber, I can say buy here, sell there, do this, come up with different strategies. At times I'll show you pivot points, different techniques that I'm using. And why? Well, the idea there is I'm building, if you will, subscriber base with people that are serious traders looking at all these different markets. Now, I record them in the same way every time, so you can use our slide bar and get around. It'll pop up and say metals, interest rates, whatever section you're on, and there's a lexicon to help you as well. Looks like one of my lights is giving us a problem here. In the meantime, I'm Ira Epstein. You have a good day, and I'll talk